How's it going? It's Rocky. Welcome to week number 31 of our trading journey in the year 2024. There are three topics that I want to discuss today. The first topic is what to do on a volatile market such as what happened this week. I want to give you a tip that really helped me out in surviving this crazy volatile week due to FOMC. The second topic is I did go back to funded firms, or most people like to refer to it as prop firms. So I want to go through the progress that I had for this week. And our third and final content, which to me is the most important one, is our progress on our self-funded account. But before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. So topic number one is a tip that I want to share which will help you manage volatile markets such as what happened this week with FOMC. The very important part is knowing that FOMC was actually going to come up. So it's not just for FOMC. You also need to be aware of situations such as a economic report or anything of that nature that may cause a bit of a change in the market. Of course, you can't always be prepared for all of those because there can be some news that will just come out of nowhere and will really affect the market. But as you can see here, this is the chart for the entire week, and FOMC occurred on Tuesday and Wednesday, which are these two right here. However, the actual report and the actual conference occurred on Wednesday. On this chart here, as you can see, the volatility that occurred with these two candles right here. And if we take a look on the range of those candles, during or after Jerome Powell spoke, the range for this one candle right here was 396 points. So that's pretty drastic. So it's something to be aware of. And then, of course, this past 2 days has been quite historic as far as the movement goes. And if we take a look at the chart here, you can see quite a big move, more than 500 points that the YM dropped on Thursday, followed by Friday, which at one point almost hit 1,000 points. It was like around 900 to 950 points where the Dow Jones dropped by, and that was actually pretty scary. And normally, with how I used to trade, this week would have been disastrous for me. I probably would have lost a lot of accounts if I was still trading the same way. So this is one tip that I was too stubborn to do, and I finally decided that I should really go back to my roots. And what I did is I rewatched some of my videos in 2021 when I first started pretty much sharing my journey on YouTube, where I was trading with micros. And micros are pretty helpful on situations like these. And that's a one tip that I want to say. If you foresee events that could change the market drastically, one way is to trade micros instead. That will help you out. And another tip that I really want to point out, I'm going to bring the 5-minute candles here. So this is for the entire week. These are 5-minute candles for each one that you see. And there's something I want to point out, which in the back of my mind, it's something I think about, but now I'm using it to be more prepared. I'm going to zoom in on Monday here. And you see this crazy candle right here, pretty significant here. This one candle, if we look at the range of that 5-minute candle, that had a range of 213 points. That was right at the US Open on Monday. So what does that tell me? Basically, if I was still trading the E-mini, which is essentially one contract of E-mini for every point move is $5. That 200 points could be, 200 times 5. That's $1,000 that you could either make or lose. So it depends, right? I'm a momentum trader, but I don't do well at US Open such as this, 6:30 a.m. in the Pacific Coast. I'm better with the slow movements, but if this is where you do well in, then that's great. But I guess the reason I'm pointing this out is if you trade like me, where I like the progression of things to slowly either go up when I'm long or go down when I'm short, my stop on my OCO, so an OCO is a bracket. So what exactly is an OCO? So let me give you an example of how it works. So for example, for this one trade here, let's say your entry was right here. Next, you then put an OCO, so one cancels the other. What that means is, let's say you were long in this position, right? So this was your entry. So what happens with the OCO is it's a bracket. So it looks like this, where on the top part would be your limit. So that's when you would exit. So once that executes, then you'll cancel the other order. And on the bottom here is where normally would be your stop. So an OCO, that's how it happens. And the reason I'm pointing out the range of 5-minute candles is it's important to size it accordingly, where you're not always stopped out when you put a bracket, right? So you need to give your trade some breathing room. So there's many theories on how you should size your stop. You could do it based on ticks. You can do it based on the dollar value you're willing to lose. You can base it off of the candles. You can base off of indicators or whatnot. I personally do it by the dollars that I could lose, because that is very helpful on the funding firms, especially with Apex that uses the unrealized profit as part of the trailing drawdown, which is pretty tough. So that's why it's always important to me to know what my max risk is on the bottom of that OCO. And I guess the point I'm trying to say here is, if you know that you'll see candles like this where it's 200 points, then you should size your stop accordingly. And it doesn't make sense to have a stop that is maybe 50 points only for this matter, because you could be stopped out right when you enter. So I guess what I'm trying to say here is, size your stop accordingly based on the type of candles you're seeing that day, and make sure that you can survive any drawdown, because no one is perfect, right? Your entry may be perfect, but there's no such thing as 100% probability. So prepare for any drawdown and be comfortable with it. And the main important part is accepting that max risk. So we're gonna zoom out a bit more on this, because I want to point out other candles that we can look at, like these green candles we're looking at right here on Monday. This was 89 points, and then this other one here is 86 points, which is pretty crazy, because with the Dow Jones Industrial Average, which is the YM, 5-minute candle, the average is about 20 to 30 points normally on the days that I would call average days. And then on certain ones like this too, this candle goes 79 points. So I'm going to zoom out to look on the other days. We're going to take a quick look on Tuesday here. You can see the range of this one candle here. This is 142 points. So this was right at the open on Tuesday. And then top of the hour, this was 98 points at 7 o'clock. And then another candle here, top of the hour again at 8 o'clock. Maybe it's a pattern, I don't know. That's 113 points. And the crazy one right here is at 12:55, 5 minutes before close. This range was 111 points, followed by another crazy red candle that could blow up a lot of accounts. This was 280 points on that 5-minute candle, which is unreal. So that was leading up to FOMC. And then when we finally got to FOMC day, which was right here on Wednesday, where the actual reports came out, the candles were not too bad. This one right here, right before the actual report came out, this was, I want to say, a range of 76 points. And then when the actual report came out on the top of the hour, this range was 95 points. And then of course, right after Jerome Powell left the podium, it just dipped a lot during power hour, where some of these ranges are 50 plus points, 100 plus points. This one specifically right here, 155 points. So I guess what I'm trying to say is, make sure you size your OCO or your bracket so your stop can survive any eventual drawdowns, and also be mindful of the contracts you're using. And that's a tip that I would give you that will hopefully help you pass your funding firm accounts or prop firm accounts if you're going through evaluations, or performance accounts. Or if you have a self-funded account, that one's a little easier to manage from my perspective, because you don't have to worry about the drawdown to the unrealized profit. All right, second topic for today is our progress on the funding firm. The difference here is I only have 2 PAs. So, a few weeks ago, or rather a month ago, I did have 20 performance account, which sadly I lost, and I tried again with 20 evaluations with static accounts, and that did not go through. And I finally convinced myself, or rather my credit card convinced myself, that I can't afford 20 of those accounts anymore. So I just stuck through a couple of accounts that got me to 2 PAs. I think I sacrificed about 10 evals on these to get to 2 PAs. So not good on statistics, but hey, it's what I got to do to earn some money right now. So we've had about 6 days on this performance account so far, all with micros. So I told myself I will trade micros only until we hit the static portion of these accounts, the performance accounts, and then only then will I scale up and maybe trade e-minis. But right now with the micros, what I'm doing is when I'm in profit, I layer in or I scale in more contracts as needed, and I double check the rules that Apex has when you sign the performance account. So scaling in is definitely allowed. So scaling in is when you're adding in while in profit in the direction of where your trade is. So that's different from a DCA, which is a dollar cost average, where that means where, let's say you enter at 100 and then the market went down and now you're at 50 and you added at 50. That's called dollar cost averaging, where a certain type of DCA, let's say if you just did it once, or it made sense because that's a support, then if you read through the rules of Apex, that's acceptable. But if you do it too much and that's all you do, DCA, 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 this is frowned upon by Apex. Whether it's right or not doesn't matter because you yourself signed that contract. So just follow the rules that they have and hopefully no issues at payout. So on this past 6 days of trading these, I'm quite happy that they were all profitable. So right here this is $20. So we haven't had a negative day yet. And I'm using yet because I need to be a better loser and I need to accept that losses happen. So I know that on this journey, I can't just be profitable every day. It's just unrealistic. So it's pretty cool how for this week at least, started at around $20 here on Monday, and then on Tuesday closer to about $80, and then on Thursday a little above $100, and then that's Wednesday rather, and then Thursday close to $20 again, and then today above $100. So you'll probably say those are little amounts, and yes, I agree, they're little amounts, and that's why I'm trading the micros. But the power here is the compounding effect if I had 20 accounts. But right now I have 2 accounts, and it is what it is. I'll just soldier on and hopefully be successful with this, because I failed too much this year and I can't afford to fail anymore. So as you can see, our total so far for each of these accounts is at about $455 each. I need to hit 1600 to be eligible for a withdrawal, and right now we are at day number 6, and you need a minimum of 10 days. So we should be okay for a payout by August 15th, but I've said that before, but this time I'm gonna say we're gonna do it. So if you're like me, where you've had a tough road, just hang in there, trust the process. As long as you are incrementally improving, you should be fine. Okay, our third topic to me is the most important one, which is our self-funded account. So our self-funded account, unfortunately, I had a tough few weeks. That's why I didn't have much content. So the account is currently at $1,530.72. So this should be a lot higher at this point, but it is what it is. I'm just gonna find a way to grow this as much as I can. So I want to go through the statement to show you how we did this week. So gonna go up here, look at the statements, and from the statements we will go to our account balance history, and we will look at this week, and we'll start from last Saturday on July 27th to today. Oh, that did not change. Okay, July 27th, press OK, to today, August 2nd, and press go in there. So you'll see here are pretty much our ending balance for each of those days, or rather starting balance. And I will bring up the calculator just so we can calculate how we did this week. So for this week, we ended at $1,530.72. And our starting cash was right here at $1,290.06. So our total is a respectable $240.66. So it's not livable wage, but this week I just had to adapt trading micros again, and I like what happened there. I like my results. So really, it's just scaling up as needed, and hopefully we can have a week where it's a week that enough to actually pay our rent. And my main goal again is to show you an average trader as myself, the ups and downs, and hopefully it's relatable to you. And if you ever needed some help or needed to chat, reach out to me in social media. I'm more than happy to chat and talk about anything really. And at the end of the day, I'm not selling anything, no courses, no Discord, none of that. But I do have some affiliate links if you want to support the channel, and of course the ads from YouTube, that helps me because I do have some earnings for this channel. All right, y'all have a good one. I'll see you on the next one.